Folks, welcome to the Contrarian Report. We had a great week last week. I want to touch upon a whole bunch of trades that we did, why we did them, and when we knew to get out. Secondly, I want to touch upon some trades that we are looking to trade this coming week, both to the long and to the short side. And we'll touch upon a couple of the stocks that we mentioned last week and we're still watching as well, just to elaborate further on those. But before we do that, what I'd like to do is, as frequent visitors to the blog know, I send out my Contrarian commentary the week ahead to members each Sunday. And I just want to touch upon my one concern as we headed into last week, which was not being discussed by CNBC, but I was watching out for it because it's a major issue, and now it's finally starting to get some attention. Let's listen.
The biggest concern over in the EU is if there is a trigger of credit default swaps on Greek debt. For all intents and purposes, Moody's is saying that Greece has defaulted on its debt. S&P 500, selective default. Fitch, restricted default. So what the concern is here is that these financial institutions, wherever they may be, here in the U.S., Europe, Asia, wherever they may be, they may have to pay off these creditors for having to take a 70% haircut on the Greek debt. The problem with that is that many of these institutions, and this is what almost brought AIG down, the reason why they call them swaps is to avoid having to put up reserves against basically their underwriting of insurance policies of these credit instruments, these bonds. So the question becomes, where will they get this money to pay off this debt? And Greece is just a microcosm. It's so small and minute, it's ridiculous. However, when you start talking about Spain, Portugal, you're talking far larger numbers. So we really need to keep an eye on whether or not these credit default swap contracts get triggered over in Greece, because I can tell you that if they do, you are going to see a shiver run through the financial markets that you have never seen before.
And that was last Sunday, folks. So fast forward to Monday, and we saw a correction in the markets. And it wasn't a small correction, it was a large correction. Here we owned the TZA as we headed into last week, and out of the gate it took off on Monday, Tuesday, and we took profits on our shorts of the Russell 2000 because we knew by looking at a chart of the Russell 2000 from the previous week it had broken down below the lower band of its rising uptrend line. Very negative. You can see on this chart here, this is a weekly chart of the Russell 2000. Great uptrend channel. This is last week. The previous week, we closed below this lower band of the rising uptrend line. That is extremely bearish. We did get our counter trend rally last week. Can it break above here? Sure it can. But as of right now, until it does so, until it's able to rally above 83.31, this rally for all intents and purposes is over. What we saw here is an attempted rebound last week. As I mentioned before, we went into the week. You had to be short of the Russell 2000. And sure enough, we had a great week last week with the TZA. And we'll be looking to add more of the TZA as we head into the coming week. Why? The reason is this. Take a look at your transports. These are the Dow transports. And I'm bearish on this market overall, and this is the reason why I was getting so short of the market. You can see overlaid in red here is the performance of the Dow Jones Industrial Average relative to the Dow Transports. Why is that important? You cannot have a healthy market when you have the Dow Transports correcting and you have the Dow Jones Industrials rallying. That's a divergence. That's what I look for. They don't talk about it on CNBC until it's already happened, but that's what I look for, and that's what I tell my members to look out for as well. That's why we added to our short positions, and we were ready when the markets corrected. When the markets corrected, we took profits and we loaded up on our long. It's simple. Buy low, sell high. our trades for last week, besides TZA, which made a handsome profit on, great way to start off the week, HUSA, Houston American Energy. I mentioned this one last week on the blog. We were buying here, and finally, because I had pointed out to members in the weekend commentary last week that historical support was at $6 per share. And let's take a look at the intraday chart of HUSA. This is a 5-minute chart. What we did was we sent out an alert to members on Thursday afternoon when we hit the $6 per share level. And in all actuality, I think we got it at 5.95, doubled our position right here. We only spent a couple of minutes below the support level, and sure enough, it took off like a bat out of hell. Now, I took profits on Friday on HUSA because I was concerned about the stock's ability to break above the 650 level, and I didn't want to worry about it ahead of the weekend. More likely than not, if the stock doesn't break out and get ahead of me, or if it doesn't collapse all completely, I'm going to be getting back into HUSA early next week. So if you want an alert, you want to know when I'm getting back into it, please subscribe for the 14-day free trial offer. You'll get the Contrarian commentary. You'll get the alerts. Learn how to use your broker's software to allow it to set orders for you, advanced orders, trailing stop loss orders. There's no need for you to be sitting there going, I don't know whether to buy, sell, or hold. No. If you bought right, you used your discipline, the stock begins to rally, you want to use a trailing stop loss order so you don't lose your profits. Let's move on. Apple. We went into last week short of Apple, and we had a fairly decent week. I had already been short back here, so for all intents and purposes, I added up here, and we were able to flash a semi-decent profit, small profit, but a profit nonetheless, not as much as I had hoped. Now, I saw that the stock put in a bottoming tail, so what I wanted to do was close out that position. The chances of the stock rallying due to the iPad 3 hype was probable. So I didn't want to fight it. So what I did was I covered that position. I was short Apple using the April 495 put option contracts. Very, very liquid, very, very good instrument to use with Apple. Apple's great options. So we were right in closing out that trade because it did in fact rally. On Thursday afternoon, I opened up a new short position on Apple. I'm going to be adding to that position. I think Apple is going to go down. If it continues higher, we're going to have a stop loss right above the 548.21 level. But my guess is that this attempted breakout, what I always like to say is, the test is always at the top. What does that mean? If Apple is unable to break out above 548.21, it would have put in a lower high. And if it takes out 516.22, well, you're in for a bad correction on Apple. So it's a cheap stock. It's a great company, but the hype is behind it now on iPad 3. So I think the time is right to look to get aggressively short of Apple. And we know exactly where to put our stop loss. So we'll look to add to that trade in the coming week. What you're looking at here is a 15-minute chart on Apple. And if this goes back to February the 29th through March the 5th. And late, I believe it was on March the 2nd, I sent out an alert to members that you need to watch out for Apple because what it was doing was it was setting up a potential head and shoulders formation. And here's your left shoulder, head, right shoulder. It was inside a tight pennant formation, and my guess was that it was going to fail. And sure enough, it attempted to break out on Monday morning, failed. This is where we took our profits, and the stock ran. Once you see these bottoming tails, you need to get out. You need to get out. This is a sign that there are buyers here. So we got out. We made a profit on our Apple short, and we are now shorted again, small position, but we will be looking to add to it again. I will be sending out alerts to members. You want to get that alert? 14-day free trial offer. This is a stock. This is Zeltic Aesthetics. I don't know what they do. ZLTQ. And this is from a fellow member, Shane. Not all of my stocks that I come up with are from me. They come from my members. That's the value that being a part of a community has, is that I have some brilliant members, and this is one from Shane. This is a great stock he pointed out. He sent me an email. He goes, Bob, take a look at this. Did this come up on your screener? Because it's at extreme oversold levels, and it has a 46%, 47% short interest in the stock. I took a look at it. It was on my screener. They came out with, it was a confusing earnings report. I didn't act on it. I held back on it because it took a little bit more due diligence than I was ready to offer to my members. But he took a look at it first before I did, and sure enough, Shane was right on the money. So thanks, Shane. And you could see a beautiful response in the stock here. We were long. They upgraded it on Friday. A great trade. We closed it out. We took our profits. Sent that alert to members. Take your wives out to dinner. Shout out to Shane. Great job. Oxford. Another fellow member pointed out Oxford Resource Partners. That was Eric. Eric, great call. I mean, this is Shane and Eric. They contributed fabulously last week, and all of our membership base was alerted to these trades. Eric and Shane received the credit that they deserve, and this is where the Contrarian trader is going. The members area is going to be moving towards more of a community where Shane and Eric would be able to communicate with fellow members of what stocks they're watching. Rather than just communicating through me and me disseminating the information, no. What they're going to be able to do is they're going to be able to provide information, bounce ideas off of each other in the members community. And now those new phases of the Contrarian trader are going to be rolled out in the next coming months. The prices are going up because the services that are going to be offered are going to be worth a lot more. So if you're a member now, you're going to be grandfathered in. Your price is not going to go up. If you decide to become a member after all these phases are in place, the price is going to be raised. I have to cover my costs. It's expensive. So I suggest take advantage of the $29.95 now. You get a 14-day free trial offer. You're going to know in 14 days whether or not it's right for you. If it's not right for you, you cancel. That's all. So, and if it's right for you, you like it, it's $29.95. It doesn't get raised on you. Prices don't get raised on you. I have members from 2006 that are still paying $19.99. So please take advantage of it now. I beg of you. Let's move on. Oxford, getting back to Oxford really quick. Oxford, a great trade. We bought it right. Great rally, 3% trailing stop loss order. I can't emphasize this enough. Let your computer do the work. You don't need to sit in front of your computer all day long. If you have a full-time job, the Contrarian trader is for you. All you need to be able to do is use discipline to use advanced orders. Use your trailing stop loss orders. Use advanced orders to get into a stock. Apollo Group, I touched upon this one last week on the blog. This stock's not ready. My guess is by the resistance you're seeing here at 43, the probability of the stock pulling back and probably taking out this 41.75 support level is probable. I wouldn't touch this stock. Up volume is declining. And yes, technical analysis for dummies, that book will tell you that the stock is oversold and should be bought. Bull crap. This RSI can go a lot further. So I would strongly suggest that you stay away from this stock. It's probably going to head south. If it breaks down below 41.75, short it. DRCO. I touched upon this one last week, and I really no longer like it. And I will go into the reasons why I no longer like it. First of all, it was an extreme oversold trade. One of the worst things I hate about stocks that are extreme oversold are those stocks that trade sideways, alleviating the extreme oversold condition. You don't get that short covering rally. And the stock now appears to be at resistance at 950. This is what I call cliffing. And it's like getting ready to fall off of a cliff. Here's the ledge that's forming. And you may look at it at first and say, you know what, this stock looks like it's really trying to consolidate and break out. When I look at it, it's showing me that it can't get above 950. And when I look at the stochastics, when they're below 20 and they begin to roll over below 20, the probability of them rolling over and going further south is highly likely. So I would not trade this stock unless it breaks out above 971 if you want to treat it as a momentum trade. And stocks that are trading below all these moving averages, I wouldn't consider momentum trades. So it's not for me. Could be for some people. It's not for me. On balance volume still looks good, but this stock is no longer for me for those reasons I mentioned before. Resistance here. Stokes appear to be rolling over. Sara Lee, I touched upon this one last week. Here's where we closed out last week with this big candlestick, beautiful wick on top. To me, that's money in the bank. So sure enough, because what is this telling you? The stock is trading at all-time highs. So when members and I were looking at the Contrarian commentary, looking at where historical resistance was, there was none. So you need to feel around, poke around to see where you want to open up your short position. And how do you know? How does the market tell you that a stock is going to correct when there's no historical resistance? Well, when you see a wick, a shadow, it's called by some, I call it a topping tail, whatever you prefer. Whenever you see a topping tail, that's the market telling you, listen, there are sellers above and they want to get out. Does that mean that the stock can't break out higher? No, of course not. It just has to get through this resistance. But last week, the stock declined by $2 per share, about 10% in 2 days. That's a nice trade. And my members were alerted to it. Folks on my blog were alerted to it as well. That's the value that we provide to our customers. This is a stock that just came up on my screen this week, and this is an extreme overbought stock. ASNA retail group, I don't know what they do, I guess in the retail sector. RSI at 86.68. This is a very bearish day here last week with this neutral day. Closed well off of its highs of the day. Pulled back, consolidated. Let's see. Remember, let's go back to my Apple phrase. The test is always at the top. Will it be able to break out above $43 per share? The probability is yes. Extreme overbought stocks tend to get more overbought, especially if there's a high short interest. So I'll be going into in great detail with members on all the stocks I'm about to mention in the week ahead commentary set to be released on Sunday, where historical resistance is, and on our longs where historical support is. What's the short interest? What does that mean to the stock, and what type of expectations for profits could we expect? So I'll be going into that on Sunday. So ASNA retail has been added. MNTG, MTR Gaming Group, I guess gambling. Again, I don't know what they do. RSI above 85. Nice double bottom formation on the slow stochastics here. Stock is strong. And here's your wick. What did the stock do? It traded, I'm not sure whether or not it closed higher than the previous day. I don't think it made a new daily high. So it looks like we have a little bit of resistance here. Can it continue higher? Yeah, again, overbought stocks tend to get more overbought. What becomes important in a situation like this is, what's the short interest? Because if you have dumb shorts in here that refuse to cover, and then finally they're forced to, they're going to send the stock from $4.80 to $5.80 in the flash because they have to cover. So you have to calculate that in. Is there any overhead historical resistance on the stock? We need to look at the weekly and monthly charts to identify it. And that helps us determine where our best risk to reward entry points are. BONT stores. I've traded this stock many times. Great trading stock. There's always a huge short interest in it. Topping tail. This move lower on Friday. It was pretty much baked in. You can expect it. Stock is still trading above 85 on the RSI. Stokes look good. You might see another pullback here and then a breakout higher. So what we want to do is, this is an early cyclical stock. And when you have early cyclical stocks, you have a lot of shorts from back here that, they don't read charts. And they don't realize the stock is in a new uptrend. They think they're still part of this old downtrend, and they're going to short it back down again. No. It's not going to happen. It's not going to happen. It's in a new uptrend. It's trading above its 50, 150, and 200-day moving averages. It's not going to collapse unless they come out with an SEC investigation or something horrible happens to the company. CFO resigns and flies off to the Grand Caymans with his girlfriend. So other than that, the stock is going to pull back, head higher, but we want to short it on that move higher, if not long at first. Enjoy the ride higher, then short it, and then get out. Move to the sidelines. Because it's not an investment. ACAT, ACAT, I know this company. They produce some really good products. Real guy stuff. All right. RSI of 85.05. This stock is looking really, really good. It's either going to, on Monday morning, it's either going to break out or break down. One of the two. And I'll be going into members why I think it's going to do one over the other on Monday or Tuesday. More than likely, we're going to be involved with this stock. So, ACAT, join the 14-day free trial, and you get my commentary on it, okay? What I'm looking at right now. Again, we always want to take a look at weekly, monthly charts. I keep repeating myself, but it's worth repeating because it's just a simple business. It really is. The formula is, how do we get rid of emotion? Well, you use your computer, your software. How do we get into a stock? We identify historic support, historic resistance. We also take a look at volume, price and volume action, how our indicators are setting up. That's all. It's as simple as that. Any upcoming catalysts that can move the stock, what type of short interest is in the stock that can help propel the stock higher. And that's it, folks. If you're watching this on YouTube, please subscribe to my YouTube channel. If you're watching this on the homepage, give me your email address and you'll receive the Contrarian report each week, notification of when I put it up. And folks, if you're thinking about becoming a member of the Contrarian Trader, please do so now while the price is still $29.95. It's not always going to be that price. I've showed you results. I have transparency. On my blog, I post my results. I go over them. You can go back for months now and see what type of historic results that I've had. I don't have any bad press about me on the internet. I'm very, very transparent. You ask me a question, you're going to get a straight answer. And that's how I do business. So please subscribe to the 14-day free trial, and I hope to hear from you. If you have any questions, shoot me an email. And again, please show that discipline. Buy in increments. I don't care if you become a member or not. Just use caution. Buy in increments and know why you're buying and have an exit strategy. We'll talk to you soon. Bye-bye.